All right, guys, 8:46, we will start. So, I am moving on to the paper December 2020. I know most of you don't have the access for this one. So, I will take images and share the images in the WhatsApp group so that you can access the images. I don't want to skip this one, guys, because it has couple of interesting questions which I want to discuss with y'all. I feel it's good to discuss. It's a bit of a different kind of a pattern. This paper has a bit of a different kind of a pattern. So as a practice in each class, I discuss this because I feel it's a bit of an interesting paper. So I'll take screenshots and share with you guys now. This is not the SLS in sense. No, that is an extra class. It's not a TRG session. That is because Mr. Shan and Fadil wanted to have extra class. Shan, Fadil, and Imad. He's not well. Taxation is not hard. Just you need to remember. That's it. Nothing to think. It's just to remember. That is also just remember and do. Just remember and do. No, this question is on IHT. Let me share the images with you guys so you can start working around it. All right, guys, I shared the images of the scenario in your group, WhatsApp group. December 2020, this one. So please access to your WhatsApp group and get the images of the question. So I am starting the question now. Calculate the IHT payable in respect of Aurora's estate if she were to die on 6 December 2019. No, unfortunately, no. So I share the images so that you guys can access from there. So can you guys try this one? So it's 3 marks. So that means we have 5 minutes to give it a try. Can you quickly try to do this one? In the expert success plan group. Yes. Wait, wait, I'll put in the normal tax class group as well. And you guys need to check the messages that they are sending. Huh? Okay, I sent in the other group as well, the normal theory class group also. Guys, 5 minutes quickly. Okay, guys, time is up. Anyone who completed? Right. I'll give you 3 more minutes. Go ahead. Have to. You have to try. So we can write that in the exam. I didn't revise. So we have to try because I told you at the beginning, this paper is a bit of an interesting paper. So that's why I didn't want to not to do this paper. Somehow I want to do this paper because it's a bit of an interesting one. So 3 more minutes try. We really need to work around the timing factor. But given the nature of the paper, I'll give you 3 more minutes. Everyone try. Okay, I already got one answer. Good. Uma, how about you? Done? Right. Alright. Done. I got two answers. It will be really great if the others also can share your answers, please. And guys, you have to speak a little louder today. I told in the morning also. You have to speak a little louder today. I can't hear. Waxing issue. So they gave some drops, but I think I will have to get it clean. They have to clean them. Yesterday, no, the specialist was not there. That fellow is available on Thursday. So I can survive till Thursday. Job has the local is a problem. Full time man, I mean, South is not a problem at all. Actually, how you attack me? My main concern is I don't know. I don't know. Right on time. If the class would have time. Have to present it's not area legal based. First question. We started and the question is shared in the group. Okay, guys, that 3 minutes is also up. Let's start discussing. I got some creative answers, so let's see how to work around a question like this. As usual, I am going to start reading from the requirement itself before I move on to the scenario. So the requirement is calculate the IHT payable in respect of Aurora's estate if she were to die on 9th April 2019. That means if she died on that particular day, how her estate is going to be. Clear? You should assume today is 6th April 2019. You are a trainee chartered certified accountant. Who is a chartered certified accountant? Who? What is chartered certified accountant? Who offers chartered accountant? All professional accounting. Really? What is the meaning of ACCA? That is only, guys, what is this? You are studying ACCA and you don't know what is a chartered certified accountant. Ah, A is not there. No, that's why you get confused. Okay. What a marvelous answer. Okay, this is about an ACCA fellow we are talking about. So they are talking about you, like Fadil said, because you guys are the trainees right now, right? Students. Agree? Okay. You are dealing with the tax affairs of a person called Aurora. Let properties. Aurora owns 3 freehold residential properties which are let out. Property 1 and 3 qualifies for PRR because at separate times they were previously occupied Aurora immediately after purchasing each one. These 2 properties also have outstanding interest-only mortgages. Details are given to us. So for each property, we know what is the current value. Current value means obviously the market value. Then we have been given with the outstanding interest-only mortgage. Then there's a chargeable gain. If the asset is sold, how much is a chargeable gain? How long the ownership period has been? And out of that, how long the PRR qualified period is. So those information are given to us. For our requirement, is there anything that I can grab from here? For a first requirement to calculate the death estate, is there any information we need from this table? No. Who says yes? Who says no? Ishak and Fadil, what do you guys say? It is Aurora's and whoever the trainee is or her problem. Sorry? Yeah, say. Why do we need that information? Good. Shan, why don't need that information? I don't know what to do with that information, is it? I thought. Assuming the person is dead. And now they are saying to assume she's dead. So yes, I agree. Partially, Uma's answer is correct. Current value we need to take. Not just the current value. When you are calculating the death estate, they're asking for the death estate. The mortgage only interest is also deductible, right? So that also we have to take from this table only. So each property, take the market value. 2 properties, you have mortgage interest, deduct that as well. Agree? Clear? Right. Then all 3 properties has been let out during any periods when not occupied Aurora as her principal private residence. So whenever she does not use the property, it has been rented out. None of the properties were let as furnished holiday accommodation. So it's clear, none of these are FHAs. Inheritance tax. Aurora's only other asset is her current main residence valued at 500,000 pounds. Do we need to do anything with that? Who says yes? Okay, only Uma says yes. Who says no? Ayu says yes also. Who says no? Why no? Okay. So market value is the current value. No, this is a separate asset. Read properly. It says apart from the above. Correct? Apart from that means this is a 4th asset that is coming into the picture. Are we okay? Meantime, Shan, what are we going to do with that? You said we need to use it somewhere. That somewhere you need to use it. Uma, how about you? We need to edit. Great. Yeah, Arundhati is also in the same view. We need to add this to your IST calculation. Yes. Main residence is also part of your death estate, so we need to add it to the other property values. Agree? That we need to read the balance part of the scenario and see whether it has been transferred to a direct descendant or not. But value taken to the calculation is confirmed. We're good? So right now, what am I doing is while reading the scenario itself, I'm plugging the numbers so that it will take save me time, right? Otherwise, I will have to read the scenario, then again draft the answer, then again read the scenario to get the numbers. So right now, while reading itself, I'm plugging the numbers so that it's saving me time. For you also in the exam, that is what you need to do. Don't read it, then read the requirement, then again read and draft the format, then again read to fix the numbers. Don't do that. It's a waste of time. Start from the requirement, then you know what are the numbers you require. While reading the scenario for the first time itself, structure the format and put the numbers there itself. That's what I'm trying to do now. We are good? That is going to save you a huge amount of time. Are we okay? Clear? Right. So the property does not have a mortgage. Under the terms of her will, Aurora's entire estate is left for her children. Now, yes, what Fadil said is correct. Residence nil rate band is coming into the picture because the question says the entire estate has been transferred to her children. If it is transferred to her children, then residence nil rate band comes into the picture, right? Why? Because children are direct descendants. So if you transfer anything in the sense main residence to your direct descendants, you are entitled to claim for the residence nil rate band. So how much is the residence nil rate band? 175. Lower of what? Great. It's lower of 175 and the market value of the main residence. So in this case, main residence is 500,000. So 175 will be the residence nil rate band. Are we good? Shan, you ask some question. Now okay? Right. So they continue to explain further. Aurora's husband Andrew died on 15th August 2017 with all his estate left to Aurora. That gives us an indication that he has not used his residence nil rate band, isn't it? Because he has transferred everything to Aurora means nothing has transferred to the direct descendants. If so, husband's residence nil rate band is also fully available. Agree? Right. During February 2017, Aurora and Andrew both made lifetime gifts of assets to their children, which fully utilized their respective inheritance tax nil rate bands. So both nil rate bands are over, but you have both residence nil rate bands. Agree? That's all we need to know about to calculate the IST for the death estate, isn't it? Those are the only information we need. No. PT, CLT, all are done when you come to the what you call the death stage. We okay? The transfer of residence in red band doesn't have like the NRB. NRB will also be there. No, no. Nothing like that. Whatever unused, you can simply transfer because throughout the period, so far it has been only 175,000 pounds. Are we okay? Morning, right on time for the next question. So if I move on to the answer, I took the market value of all the properties. Like I didn't spend time. It's all 350. So I just multiply 350 by 3 just to save my time. That you can do in the exam. You also don't need to get 350, 350, 350 and do a summation. You can simply multiply 350 by 3. Then main residence I took 500. Mortgages I have 215,000. So I just multiplied that by 2. 230,000. Then value of the death estate is 1,320,000. Agree? Where I got the number. So this 1,050,000 pounds is from the market value. You have three assets, each valued at 350. So 350 into 3 is 1,050,000. Okay. Market value of the residence, which was given in the para, 500,000 pounds. Then we have the mortgage. You have two mortgage interest, 115,000 each. So 150 into 2 would be 230,000. As a result, the value of the debt estate is 1,320,000 pounds. But like we discussed, she has her own residence nil rate ban and she has her husband's unused residence nil rate ban. So 175, 175, I have claimed those two as well. We already discussed a nil rate band is not there. Agree? Both have been fully utilized. The question clearly states that. So I took out, I didn't consider that. Then my taxable estate is only 970. After residence nil rate band, you can deduct it if it was available. If any unused portion of nil rate band was there from her nil rate band or her husband's nil rate band, after residence nil rate band, you can use that. Are we good? So then I just need to apply 40% on this. So the inheritance tax would be 388,000 pounds. Are we okay? Sorry? Residential rate band and 325,000. Yeah, those two are two different bands. Both are per person. Per person. All the bands are per person. Shan, you also had a question, right? No, no, raise the question. Sure, I had a question. AE of 6,000. Guys, AE was given for two situations. Lifetime transfers and lifetime transfers upon death. So we had three situations where IST will come into the picture. Lifetime transfers at death, plus death estate. So we are not talking about the first two. We are talking about the last one, the death estate. Death estate doesn't have any annual exemption. Annual exemption is only for first two scenarios, that is lifetime transfers and lifetime transfers at the time of death. Are we okay? Soumya, are we good? Can transfer. That's why we use husband, sir. Residence nil rate band, you can't do that. Whatever unutilized, you can transfer. Why we split or divide the nil rate band is because it has been changing throughout the period. Residence nil rate band is something new, which was introduced in 2017 only. So far, it has been always 175. So nothing to split. Nil rate band, why we split is it has been there for a long time. So different years, different nil rate bands. So far, we don't have that confusion for residence nil rate band. We're good. Again, that is what? That is lifetime transfer, first situation. I got another question. Why we need to deduct the mortgage? Again, we discussed any legally binding commitment by the deceased person needs to be taken out when we are calculating the death estate value, right? Including funeral expenses. So, mortgage, obviously a legal binding commitment. So that is why we are taking out the interest of that. Devaki, are we good with that? Great. Tapper relief. Again, tapper relief at which point we gave? That is for second scenario where a person dies and lifetime transfers within the last 7 years, we taxed. Only on that occasion, we consider the tapper relief. Not during the lifetime, not on the death estate. Yes. Okay, let me just summarize whole IHT in one diagram. I can see all of you all are confusing between different aspects of IHT. So
They would have asked for a skill, then we should have read the whole scenario.
I'll come to that after. Okay, so if you take IHT, I hope this is visible for everyone. Readable. So IHT, there are 3 situations. You have lifetime transfers. You have lifetime transfers at death. Then you have death estate. Agree? These are the 3 situations where we tax IHT. Agree? Under lifetime transfers, we had 2, PET and CLT and exemption. I'm not talking the exemptions here. If I take out exemptions, we had 2, PETs and CLTs. PET means a gift from an individual to another individual. CLT means anything else other than PETs and exempted transfers. Agree? So out of this lifetime PET, we didn't charge any IHT. No IHT was charged. And CLT depend upon whether the donor is paying or donee is paying. Agree? If the donor is paying, we assumed it is the net. Therefore, we taxed at 25%. If the donor is paying. If the donee is paying, we said that is gross. So we taxed at 20%. Agree? Sorry? PET while the donor is alive, no tax. Yeah.
We don't have to gross it, right?
We have to. We discussed.
Gross the net.
We have to gross the net. So tax needs to be added to the gift value. After deducting any exemptions and AEs, there will be some value, no? After taking out all the exemptions and annual exemption, there will be some net figure. For that, you need to add this if the donor is paid to gross it up.
We should add 25.
Yeah. To get the gross figure. That gross figure is what we are taking here. Agree? This is always gross. Gross chargeable amount. Lifetime transfers at the time of death. We are agreeing on that? So when you are doing this calculation, here you had exemptions and you had A. After that, you had nil rate ban. All 3. For all 3, it was commonly available. All 3 in the sense CLTs, whether the donor pays or donee pays doesn't have an impact. Always we had the exemptions like marriage exemption, small gift exemption, expenses out of the normal income exemption, annual exemption, all these exemptions were there. Then AE was there. That is the net figure. Then we adjusted nil rate band if it is a CLT. These 2 were applicable for PETs as well. Agree? Only nil rate band we did not use against the PETs while the donor is alive. Clear? Right. Then at the time of death on the lifetime transfers, we always apply 40%. Agree? Then we had the tapper relief. And whatever we paid here, tapper relief depends on the time gap. So we deducted whatever the IST already paid on the CLTs as well. Agree? That's what we did for lifetime transfers at the time of death, isn't it? And if you had any nil rate band remaining, we took that prior to applying the rate. This was a procedure. No? That's also fine. If any unused nil rate band is there, we use that prior to applying the IST rate. The net figure only we apply the IST rate. Agree? That's also clear. That is the where is the arrow connected, my dear? Okay. And where is it connected? Under a bracket. Bracket means deduct. So whatever you already paid as IST, deduct. That's what I said. Rate? You can see that part. Okay. First thing, before I move on, I can see one thing. You are panic for the exam. Guys, don't panic, man. That is just an exam. I told you how I did the exams, no? So compared to that, it's not a problem, right? Don't panic. With the experience I'm telling you guys, if you panic, you will forget what you know as well, and you will jumble around everything you studied. Don't panic. Whatever you know, write that part. You don't need to know the entire syllabus, no, to be honest. You need 50%. So that means even if you know 50% of the syllabus, 50 you can score. Isn't it? None of us are God, no. Really, you get the person. I mean, throughout the entire ACCA career season, only one fellow is there who scored 100%, no. That is for how many years? 200 plus years, only one fellow has scored 100, no. Members itself, we have 252,500 now. Out of that, only one bagger has scored 100. You don't need to go for 100, no. Clear? We need only 50. So don't panic. Just be calm. And whatever you know, structure that properly. That is more than enough, guys. Clear? If you panic, what will happen is you will jumble everything that you studied. IHT part, income tax part, sometimes another part from capital gains, and you're not answering to what they're asking. You are answering to a new tax act. You are creating a new finance act. Isn't it? Correct me if I'm wrong, Shan. That's what happening, right? So don't panic, guys. That's the biggest mistake you can do. There are three big mistakes that you can do. Two prior to the exam, one in the exam. Prior to the exam, one big mistake is not studying. Second biggest mistake is you get panic. Once you get panic, you're done. Don't panic. Third one, that is what you do in the exam. You don't read the requirement properly. You just see the word. Based on that, you assume a requirement. To that requirement, you are plugging the numbers. This is the mistake you do in the exam. Avoid these three. Even with a half of the syllabus, you will score 50. I vouch you for that. This is not my first batch. I have done enough tax batches, so I vouch you. Even with that, you can pass. Not a big thing. You can't score the price. I am not giving you fake promises. You can get 50. That I can assure. Even with 50% of the syllabus, you can go for 50. That I can assure. I can't give fake promises saying I only do these chapters, then you can go for the prize. I can't do that. It's a false promise. But with a half of the syllabus, I can promise you will get through the exam. That word I can give. Right? So don't panic. Whatever you know, just structure whatever you know properly now. Forget about whatever you don't know. No point of worrying about the past, no. Isn't it? We can't change it, ne? In reality, life is not a science fiction, no. So you can't create a time machine by tomorrow, go back and study from the beginning, no. That is not realistic. So the realistic thing is try to put whatever you have learned properly into folders in your mind and patiently use whatever you know, because once you get panic, you will struggle a lot. I saw that from Shan. I saw that from Ishak. Because Ishak, I know 100% you studied this chapter. That I know. And why you are getting panic now is because now you are thinking too much, isn't it? With your answer, I know you have studied the chapter because yes, there were mistakes. That's a different story, but you knew what needs to be done, right? You missed only the residence nil rate, and the rest you have done. So that means nothing to panic. Simple thing, avoid the panicking. Now, no point of thinking about the past. Think about the present and the future. Whatever you know, try to store that properly. That is more than enough. Can we do that? We can't. Can. Isha? Abdullah? Uma? And the other thing, stick to the basics, guys. We discussed for each area what needs to be done. Only do that. Don't try anything new. Yeah, good? Right. Now coming to the death estate. What did we do in the death estate? We took the market values. Then whatever the, what you call the obligations we deducted. Then funeral expenses, if there are any, we deducted that. We divided the net one. From that, if there are any exempt transfers, we deducted. That is inter-spouse transfers. Then the balance figure we applied 40%. That's all we did, right? Yes. Once you die, someone will have to spend for that. Not residence, it's a death estate. That's right, that's why. Let's give him some time to settle down. So, guys, again, don't panic. Have the focus. Even if you panic, fine, but have the focus. Panic, I can deal with, but if the focus is not there, I'm also helpless. Isn't it, Fadil? Right. Are we clear? We're good. Then under this death estate, we had one more confusion came into the picture, that was residue. So let's have a quick discussion about residue as well as a revision. Because as far as I know, this program is a revision program. I would love to make it bold, guys, but it's not bolding. I don't know why. So we had something called residue. Residue means the remainder after dealing with everything else, the remainder on your death estate will be transferred to someone. Everything. So we take the market values of everything. Then we deduct the obligations. No, different. That's what I'm explaining. That's why I'm explaining it again. You're good?
Then we came from first.
Yeah. Then we have funeral expenses. I mean, the net figure what you get, you can use that. I'm just explaining the full process of residue. This will be the net figure. No? From this, you can deduct your residence nil rate band and your nil rate band. These two you can deduct. Agree? Then you get another figure. From this, you can deduct any exempted transfers. That means inter-spouse transfers for your syllabus purpose. There are more, but for your syllabus, it's only inter-spouse transfers. This is your taxable amount. So this we taxed at 40%. That is known as IST, right? So you will get an IST figure. Residue means after you deduct this exempted transfers and all, you have this taxable figure that minus your IHT. IHT. Because the balance in IHT is deducted from your estate, no? The balancing figure would be after deducting IHT also, isn't it? So from your, actually not from the taxable estate, sorry. It should be,
So I have taken that minus 40% amount, the special legacy transfer, we get residue.
can do.
So you-
Yeah, if you have any specific legacies, you have to deduct that as well. True. Simple terms, this figure is there. No? Actually, no. I will give you a easy way. Start from here. This is the actual value of estate. Once you deduct only the liabilities, prior to deducting any NRB or RNRB or whatever, that will be your actual figure of the estate. Net figure. Actual net figure. Prior to nil rate bands and all. That is the actual net figure, right? From that, deduct exempted transfers. Again, deduct, like Fadil said, if there are any specific legacies, like X amount has been transferred to brother, Y amount has been transferred to a friend. Take out those specific transfers as well. Deduct that. Then deduct IHT. That should be your residue. No? Because residue means from your total estate, how much is balance after taking out everything specifically given.
it's in the screen. Makes a difference.
Depending in the question, NRB might make a difference, RNRB might make a difference, specific legacies might make a difference, exempt transfers also might make a difference.
So, if they say to calculate this stuff, this first stuff, let's take this one. And then say to calculate residue, we can just take this one.
Yeah, can do.
And those RNA can this.
Yeah.
So
Yes, Fadil.
I can understand that specific legacy thing I can understand because we might not use it by its, you know.
Yeah.
So we have to use it for residue, so there is a difference I get. But about R and V, we use it for IHT as well.
No, the thing is, RNRB and NRB, residence nil rate band and nil rate band, they are still a part of your asset, right? Your estate, those are part of your estate. Just that we are not taxing that, isn't it? So if your estate is 1 million, yes, we deduct 325,000 as nil rate band. But the person who's receiving that, he will receive including the 325,000 untaxed. That's a different story. But he received that amount, right? So residue is the value that he's receiving, isn't it? So after setting off exempt transfers, specific legacies, and IHT from the net value of your estate, that figure is the amount that we are speaking as residue. Agree? It's like from your income. Once you take out your investments, once you take out your savings, the balance will be the amount available for your expenses, isn't it? From income, if you deduct that. So in accounting, you might have learned the formula, right? Yeah, income minus expenses. What? Finance management, let's say. Yes, I got the answer.
Savings and investment.
Savings. Investment is also part of savings. No? This was a traditional formula, right? Now we are changing this formula. The modern world, the formula is income minus savings. This is what you can spend. This is the real business world. Agree? Similarly, your debt estate minus whatever you need to give out, the balance part is the residue. Agree? Now we are clear. Whatever we need to give some for some other party, take all those things out from your debt estate. That figure is known as the residue. It can be whatever you need to pay to IRD, it can be whatever you need to pay to funeral expenses, it can be something you need to pay to your bank, it can be something that you need to transfer to your wife, it can be something that you have specifically said to transfer your girlfriend. Doesn't matter. We're good? Clear? Exactly. This is ISD in a nutshell. So we revise the entire ISD just from part A of this interesting paper. Now you can see why I say that is interesting, right? This is just part A out of 3 main questions on the first one. The 10-mark question, we are talking about the 3 marks question so far. Are we clear now? Soumya, Devaki, Arundhati, everyone else on online, are we okay? Imadi is not well, I think. She said yesterday he is not well, Kiela. Uma, are we good? Right, so we did a full revision of IS3, which was not in the plan for today, but we did. Are we good now? Any clarifications? Right, then can I move on to the next question? Right. Assuming Aurora does not die, so she is lucky enough to live. For each of her 3 let properties, calculate the chargeable gain after taking into account any available reliefs, but before deducting annual exemption. So prior to AEA, CGT, so AEA. Yes, that's why I said it will come again, guys. Don't worry. As I always say, your examiner can mix up different taxes. I told you, IHT can be mixed with CGT. Didn't I tell you? This is a pure example how you can do that. If a person is dead, IST. If a person is alive, CGT. Simple as that. So can you try this one? Again, 3 marks, so 5 minutes. This is straightforward, guys. This you should be able to do within 5 minutes. You don't need 5 minutes for this. Yeah.
No, no, take the full. Yeah.
Private residence ready.
एक करिए,
एक ही ना, एक ही ना। Standard. 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 That.
taxation है, साथ में डेली का तो exemption है,
Before deducting it.
कोई यार ये कर यार आएगा
पहला फुल देखा कितने
आया इंट्रोड्यूस किया फिर
इंडियन एक्सीलेंट पहले देखा
पालन दिखाई दिया
tax. Okay, I already got one answer from online. Afsal, Amna, Arshad, Rufina, Siha, Saumya, Devaki. How about your answers? Can I have your answers also, please? Sorry. Guys, this is a straightforward one. What?
studying is part of it.
You haven't started studying.
Even
So you're also sitting for the exam, not only her. Will எல்லாரும் Adil, you anyway comes late, no? So I'll give you 5 extra minutes to be late for the next day. You can late another 5 minutes on the next class. But you have to bring me something. No, not for him. So you're coming from home then? Your home, we have the wooden broom or the plastic one. Then bring one without the broom part. Mainly might be helpful for these others as well. I think we need that. Guys, we have less than 1 month for the exam now. Half a month to be precise. So now we can play around. Like I said, forget about panic. Just focus on what you know. Now, what you don't know, just forget about it. No point of wasting time on that now. Focus on what you know, practice on what you know. The problem is, I know you guys know this, but you're not clear what you know. That is because you have stored everything everywhere. This is why I told to have short notes. Isn't it? Ishak, your short note is ready? Great. What was the chapter? No, what's the chapter you need to present? Third chapter. Okay. Fadil presented, Shan presented, that's it, no? Okay. So let's start working on this one. Again, similar to what I did for IHT, let's do a quick recap on what do you call it? CGT reliefs. Because I can see you guys have studied really well. So let's do a quick recap on CGT reliefs for individuals under personal assets. So we had something called reliefs. Under that, we had two categories. Non-business and business. Non-business, we had two reliefs. We had PRR, we had LR. Under business, you guys had BADR, you had investor relief, IR, you had ROR, rollover relief, and you had GR, gift relief. You had all these four. Agree? These four, I am not wasting time now. No, those will be tested, but yeah. This question doesn't relate to any business assets, so I'm not going to touch that part now. But please check your uh, handouts or short notes or recordings or whatever about business asset reliefs as well. So focusing on non-business reliefs, these two, if I take PRR, in the class also I spent around 2 hours. You guys were the best for that. So PRR, we had two situations. This was a front runner for that also. He slept and then out of the blue moon, he waked up and started asking the same thing again from the beginning. So coming for PRR, there can be two situations. Throughout the ownership, you use the house. If so, this is going to be exempted. Problem comes if it is a part occupation. Agree? If it is a part occupation, we had something coming up called deemed occupancy. So under deemed occupancy, first one was actual occupancy. Second one, any years for overseas employment. Last 9 months. Yeah. Then we had two more. Work elsewhere for 3 years. sorry, 4 years. Any reason for 3 years. But for these last two, we had a criteria. You have to have a subsequent actual occupancy. Need not to be an immediate one, but at some point you should have followed it up with a subsequent actual occupancy. This is what we discussed about PRR. So what did we do? We just took the percentage, right? So we got the gain, divided it by total ownership period, multiplied by PRR period. That was the exemption, isn't it? Simple as that. Correct? Mr. Shah? Correct? If you were vacant, you would have known this before. Abdullah, are we good? Isha? Total ownership period. Are we okay? Uma? Fadil? Right. This was PRR. The other relief we had was letting relief for non-business assets. Please go ahead.
Writing is total occupied or total?
Total ownership period.
Yeah, but
Throughout the period. Your total ownership period.
That's
Whether
what-
you occupied or not, doesn't matter. Your total ownership period is a dividing one. Oh, that's what I said. In simple terms, that's what I said. So gain divided by your total ownership period multiplied by your PRR period. PRR period means actual occupancy plus your deemed occupancy. We are clear? Everyone, are we clear? So, Mr. Ishaq, are we good? Guys who joined online, are we clear? This is a quick recap on PRR. Right. Then let's do a quick recap on letting relief as well. Next one was letting relief. For letting relief to be applicable, there are a few criteria. What's the first criteria?
sir, what is it, sir? Yours?
For letting relief to come into the picture, there should be few criteria.
Should be mainly.
Yes. Should be main residence.
I think that should be main residence.
Second one I got online. You should rent it out while occupying. Correct. Let while occupying. While you're occupying only, you need to rent it out. Any other criteria? These are the two main criteria. Oh, there was one more. No sharing of living space. That was one example. Chan is very interested about that part only. You remember only that part, no, from the entire letting relief. Are we clear? These three criteria needs to be satisfied. Should be main residence. You should have rented out while occupying, and you should not share the living space with the tenant. Clear? If all these three are satisfied, we again check for three figures. 40,000 PRR gain for rented bar. We compared all these three. Out of that, we took the lower. That was the relief for letting. Remember?
Here, yes, here comes the question.
If theory understand, what is the problem with the question?
What's the question?
Let's go. Letting relief is clear. But for Shan, theory is also now only got understood. That's also not sure. Isha, you good? Uma? Right. Letting relief, any questions from anyone? No sound means can I assume that is good? That is a problem for me. Okay, so in this question, PRR is obviously applicable because they are straight away saying that PRR is here. Letting relief, can you apply? How? Who says letting relief can be applied? Who says no? Why no? We'll start from Ishak. Great. The question says it was rented out, true, but only when he is not occupied. Three properties has been rented out by any periods when not occupied by Aurora below the table. Agree? That means it is rented out only when Aurora is not using the property.
So
So,
no letting. Someone's-
sorry,
someone's like-
if somewhat like FHA, yes. They didn't understand somewhat, they understand some other word called Salman. Isn't it Fadil? So he's in India. When he comes back, he might want to have word with you anyway. He loves God too much. We had a good chat about Shah. Loves him a lot. Right. Coming back to this one. Finally, I needed to get the support of boss. So, just kidding. Coming back to this one. Letting relief is not applicable. Why? It is rented out only when Aurora is not using the house. So letting relief to be applied should have happened parallelly. While using, you should have rented out a part. This says no, at one point, all these has been main residence at some point, except for property 2. First para. Property 1 and 3 qualify for private residence. So it will not qualify for PRR if he hasn't used it for main residence purpose, correct? Right. So very straightforward one, guys. You don't need even this table. Just to make it nicer, I had a table. Simply what I have done, each property I have taken vertically. The chargeable gain, they have straight away given 100,000, 150 and 150. Ownership period and the PRR period is also given. Then just divide and multiply. That's it. Sorry? You will have to. This is correct. Congratulations. I was about to ask. Are we good? So first one, 100,000 divided by 15 into 2 would be the PRR. Second one, no PRR. Third one, 150,000 divided by 20 into 12 would be the PRR. Minus the gain, minus the PRR from the gain, the balance would be chargeable gain after reliefs. Are we good? Dil,
Yes, I got the answer.
let's check how you have got the answer.
I was thinking it's 133,000 and my answer was wrong.
Guys, trust the Excel. My answer, I have found out the total tax liability along with the relief. So is it wrong or would it still you will still get marked, but it's a waste of time. So
You get marks.
yeah, I mean, whatever you have asked to done, you have done. No? So for that, they will give you marks. That is fine, but it's a waste of time from your end. She has done up to the tax calculation.
Read the requirement, madam.
So I have two questions there. One, you are wasting time. Second one, we still don't have the full information. We don't know still how much would have been his taxable income. So whether there is any unused amount from the basic rate band or not, we don't have such information at the moment. So without having the information, anyway, it's risky to go for the tax calculation. Plus, it's a waste of time. So only answer to the requirement in the upcoming questions. Are we okay? But yes, the answer for your question, you will get the marks, no problem. What is the question? What's the requirement? Okay, both. Read the requirement. What is the requirement?
Sir, if you put negative and zero,
You don't get any marks for that. No marks for that. It's not required. Even for 80s, that's not required. Correct. Yeah, that is just to show. Yeah. Are we okay? In question, they are mentioning only property 1 and 3 are private residence. Then why are we calculating for property 2? Good question, but for both all three properties, they are asking for chargeable gain, right? Question is not about PRR, question is about chargeable gain. So I just took all the properties in one calculation and made PRR 0 for property 2 since it doesn't have any PRR. The rest I went ahead because now in one shot, in one snapshot, I have all three answers. Otherwise, each property you would have done one after another if you didn't calculate for property 2. This is just for presentation purpose. So at one snapshot, you can see the entire answer. So which is good for the examiner as well. That's why I took it. So, but I haven't calculated any PRR for property 2 because it is not entitled for any PRR. Arundhati, are we okay? Right. Guys, any further questions here? Yes, Shan? Yes. Any further questions? Sure.
sir, if we are deducting AEA,
They are saying not to deduct. No, you don't need to deduct. They are not asking. Okay.
I got a AEA 6,000,
Okay.
6,000 can be brought forward.
Again, the problem is to do that. We don't know when they have purchased the assets, right? Or when they are planning to sell the asset or whatever, we don't know information about that. That is the next requirement when we didn't go for that yet. No. Once we go to that, we will check for that. Right now, we don't have information for that. We will. We are good. Right now, we don't have information about what you're asking for. In the next requirement, yes, they will give. We are okay. Okay, now we have two more questions. Calculate the total amount of income tax relief which Aurora will benefit as a result of making a net pension contribution of £40,000 during the tax year. You are not expected to go for a full tax computation. Now, income tax is also coming into the picture. That's why I said this is a nice paper. Because of this question only, I selected this paper. It's a very, very interesting question. Give a try, guys. 3 marks, 5 minutes. ඈ ෆොටෝ එක බලන්න කම්මැලි කරා මම නැගිටිනවා නේ. එක්සෑම් ටික ගන්න නේද? How much is the exam? 100 what? It's not enough to pay your exam fee. That's that's why specifically what I can do is paper. It's a very nice paper. Good. I use that. Try this. People in the exam, what I will do. But to write to the examiner how to solve the very easy. You are try, you can. Just you need to try. I'm creating puzzle. Yeah. As usual, the presentation from this. Master problem is also there. Percentage composition can. I have gain there.
Hey, if you input this 50,000, then the basic rate plan will increase, so it's still 20%.
Okay, that's why I'll explain. It's easier.
37,500, 700 plus 50,000.
It's
7,700, still like 20%.
yeah. But 40,000 is the annual. 10,000 is taxable. Okay, the 10,000 again, will be for 87,000. The balance,
But can we start? Okay, let's read the requirement once more. Calculate the total amount of income tax relief which Aurora will benefit from as a result of making a net pension contribution of 40,000 during the tax year 2019-20. You're not expected to prepare full tax computation. Up to that, we are clear? Okay, let's read. After selling one of the three let properties and paying off outstanding mortgage, Aurora will have £120,000 available. She wants to use this money to make net personal pension contribution of £40,000 in each of the tax years. So, I mean, next 3 tax years, she want to do that. And would like to know the total amount of income tax relief from which she will benefit as a result of making the contribution for the tax year 2019-20. Aurora has sufficient unused brought forward annual allowance to cover 3 annual net pension contributions. So that means brought forwards are there. Let's see. Each of the tax year 2019-20, 2020, 2021 and 2021-2022, Aurora will have taxable income of 87,500 after deducting personal allowance of 12,500 from her total income 100,000. So self-employment 80,000, property income 20,000. So both are from the non-savings category. So tax rates are not changing. We are good. The details are okay. Then let's see what are we going to do. First of all, I took the net contribution, which is 40,000. Then I gross it out. They are saying it's net, no. So divide by 80, multiply by 100, which is going to be 50,000. That we all agree. Current basic rate band is 37,700. That will be extended to 87,700 with this 50,000. That also agree. Taxable income, I straight away took what they have given. So here only 70 pounds. I didn't go to correct that. I took whatever the taxable income they have given. So taxable income is 87,500 now. As a result, how much is getting additionally exposed to the what you call the basic rate band now? 49,800, right? Agree? Correct? Because earlier it was 37,700. Now it's going up to 87,700. So out of the total taxable income, which is only 87,500. So 49,800 is getting additionally exposed. That we all agree? Fadil? 87,700. Correct? So 49,800 is getting exposed. So that into 20% would be the savings from the basic rate band. Apart from that, you got a 10,000 upfront benefit as well, isn't it? Technically, you paid only 40,000, but you are getting a benefit of 50,000 here, right? The policy value is 50,000. So you are getting upfront 10,000 benefit also, which is borne by HMRC. And it is not getting taxed also. Agree? So that is also a benefit for you for income tax purpose. So 9,960 plus this 10,000, 19,960 would be the overall income tax savings that you are getting as a result of this pension contribution, isn't it? 10,000 is, now the thing is, let's say you are going to go for a pension scheme worth of 50,000 pounds, but how much are you paying? 40,000 only you are paying, right? So that additional 10,000 is not getting taxed. We are giving tax rate band extensions also, and the cost is borne by whom? HMRC. So that is also income tax benefit for you, right? That's what we took here, right? 9,960 is a higher rate benefit. The entire 100,000 is not a concern, right? Anyway, out of that 37,700 was exposed to the basic rate band earlier also. Only the additional exposure we need to consider, you know. Correct? We all good? Sorry? Why did I get 20%? I didn't get. Which 40 missing? The gap is you should have taken for entire 50,000. Whereas out of that 400, sorry, 200 is not covered. That should have been the gap. Yes, sure. No, why they give that brought forward balances? I got that question from online as well. Aren't we considering the brought forward? We did. If we didn't consider brought forward, can you go beyond 40,000 without an additional charge? Your allowance is only 40,000, right? If you go beyond that, here we are going for 50,000, not 40,000. Correct? As and when you go beyond the annual allowance, technically you should have had another additional charge. We did not get any charge here. Why? Because the question says she has brought forward annual allowances sufficient to cover up whatever the excess contribution. Agree? From the brought forward ones, the only benefit you can get is you can reduce the charge. Nothing else, right? If you haven't contributed, just because you have brought forward, there is nothing you can do for that. If you have contributed only, you are getting a benefit from the brought forward ones. Agree? Soumya, are we good? Did I answer your question? You have any questions? Okay, so you have what do you call taxable income of 87,500, no? Without the pension, out of this 87,500, 37,500 should have been exposed to the basic rate. The entire balance should have been exposed to the higher rate. But now, as a result of the pension, the whole amount is getting exposed to what? Basic rate, right? So the gap between basic rate and the higher rate is 20%. That's what we did here. Are we good? Yes, Abdullah.
With the 87,700 stated basic rate, the additional exposure, 875,
Yeah.
200 is the
That's what Fadil went wrong. Yes. So why did we account annual allowance here? Devaki, I didn't get your question, to be honest. Why? So we can go up to gross 80K. In this case, no, you can go up to 120K because she's saying for 3 years she has a brought forward. So you can go, actually 160 you can do. Each year 40, they are saying all 3 years she has the brought forward. So 40,000 each for the last 3 years, 120. Current year also another 40, so up to 160 you can go. That is not relevant for you. It's Soumya had a question, I answered to that. Don't confuse yourself with that question. Soumya, are you okay?
Sir, can you hear me?
Yep.
So they mentioned that she's willing to use that 40,000 in each year.
Hmm.
So they would have used in those particular years, right? The 40,000.
No, they are saying 40,000 is available from the previous years. So this each year in the sense the future 3 years they're speaking about. If you check the question, the tax year you are in is 2019-20, the tax year that you are in. So each year what they are meaning is 2019-20, 2020, 2021, and 2021-2022. Future years we are talking about, not the past years. Wait, let's finish one question and come to the other. Soumya, your question is clear?
Yes, sir.
Right. Yes, Isha. No, if she wants to do, and if she has any brought forward under that assumption, so if she hasn't used the personal pension contribution annual allowance up to now, each year, so you can bring forward 3 years, no? So they are 120 plus current year 40, so up until 160 you can go. Clear? This one they are not asking anything like that. No?
So sir, so we can go up to 160,000 for basic rate band relief, right? Like
Has
with
invested,
a 10% charge.
given she invested that. But here she has invested only 40. So we are sticking to the gross amount of 40, which is 50. But if she has invested up to gross of 160, yes, she could have gone.
Without
Yes,
additional charges, right?
yes, correct.
Yeah, thank you, sir.
No worries. Isha? Can do. That's what they are saying. The full calculation is also allowed. Yeah. But the thing is, it will be a waste of time. Easy one. Time will take because you have to do more adjustments there. Two different calculations you have to do, then compare, right? This one is a shortcut. Every year we would have annual allowance. So it is also a relief which are new. So we have a question. Every year we would have annual allowance, right? 40,000. So it is also a relief which we need to include in the calculation. No, the other thing is allowance is something different. Benefit is something different. Allowance can be applied only if you have spent up to that amount. It's like credit card. Just because I give you a credit card, if you haven't used it, credit card is not a benefit for you. No, we are not taxing or giving you a benefit for the credit card amount, right? What we consider is the utilized amount from the credit card. Same thing. Allowance can be given. Relief will be only up to the level that they have utilized. So in this case, yes, she had up to 160,000. I agree, but she has only spent 50. That 50 we consider. Forget about that part for you now. Let's not confuse with other questions. Devaki, are we okay?
Yeah, sir, now it's clear.
Great. So if you were not speaking with Shan, you could have understood what is 160. Then why out of the blue moon asking him? That was what I was explaining. Because Ishak raised the same question. I'll come to that after the class. Guys, any question on this 3-mark calculation? Yeah, that's enough. How many lines? Only this much. Okay, I hope everyone is good since no question is coming in. Yeah. That is what we got here. At the 10,000, the other additional one. Then it becomes 19,000. Fadil, I need that room. Yeah, okay. Right. Who's the closest to PPI? Who's the closest to PPI? Who's the closest to PPI? Yeah, who's the closest? Abdullah from where come? Khan is closer, no? Khan is closer. Fadil? I'm the closest. I'll bring this. I don't know. That's my problem. No, instead I can find some kids. Better than the proof, no? Sorry, someone said something. Sorry? Great. Next week. Khan, good luck. If the income is 100,000, additional basic rate band. No, again, guys, additional basic rate band will not be that because, like I said, here we are starting from the taxable income. Your income is not the one that is our concern, right? Our concern is based on your taxable income. So here they have given taxable income as 87,500. So our calculation is based on the taxable income, not your net income or gross income. If taxable income was 100,000, if taxable income is 100,000, yes, then the entire 50,000 will into 20% will be the benefit for you, plus 10,000. Same way, yeah. Can be done. Can be done, but I prefer if it used to this method because in this question they are clearly saying either way is okay. But in some questions like what we did like yesterday, they ask for the gap only, right? The impact only. Can be, in this question they are allowing for both. Next question we don't know what they will ask, right? So your question, the answer is yes, Soumya. If the income was 100,000, 87,000 minus 37,700, which is 50,000, into 20% plus that 10,000 upfront benefit, like we did in this question, that would be the benefit you are getting. Right. We had one more question. Explain why it is beneficial for Aurora to restrict her net personal pension contribution to £40,000 for each of the 3 tax years. Any idea why?
She transferred it.
One at a time. Okay, let's give the chance to Shan. Yes, Shan.
No unused allowance will be
They're asking why you should restrict to 40,000.
then more of the unused allowance will be reduced, right?
But you can carry forward only 3 years anyway. Abdul? Correct.
See,
Correct. From the tax savings point of view, if you invest more, already the full benefit is utilized, right? Except for that 200. Correct?
Taxable income is 87,000 plus 700, so if she has contributed 40,000, it will match to that. More than that is useless anyways.
Exactly. Anyway, it will be exposed to the same amount of tax anyway. Let's take in this way. Currently, where do we stand? Forget about that 200 gap. That 200 gap is coming because of the difference in the personal allowance in these 2 different years. So forget about that 200,000 gap. Assume your taxable income is 87,700. That we can do. If this is the case, your 40,000 means your gross will come to 50,000. If I deduct this is 37,700. Correct? That's why we have 20% additional benefit, right? On this 50,000. Because instead of this, we are exposing this now. If I invest beyond this, do I have a benefit actually? It will be anyway exposed to the higher rate, right? Now also the higher rate. Even if you invest, still it's at the higher rate. Not the basic rate. Anyway, higher rate. Yes. Yeah, basic rate. Yes. Either way, it will be basic rate. So there is no benefit for her. Tax savings wise. Second thing is, right now she is playing around and very happy because she has brought forward annual allowance. But that can be carried forward only for 3 years, right? After that, what will happen? So they're asking for 3 years. Now, by the 3rd year, all these 3 will be expired. And then next year, balance 50,000, even though she's investing, 40,000 will be covered by annual allowance on the 3rd year, right? Because brought forward ones are over. That means for additional 10,000, she'll have to pay a tax also. Because her limit is 40,000, right? But she's going for 50. As soon as her brought forward values are expired, balance state, she will have to pay additional tax also.
But that's the benefit, the 10,000.
It's not a benefit now. In this case, it will not be a benefit, right?
So the tax is
You will be paying extra charge now. It is a benefit, agree. But even though the benefit is there, if the annual allowance is over and you are investing more than that, 10,000, then this 10,000 will be absorbed to a tax, right?
The annual allowance 40,000 is from where?
That's a fixed amount, no?
Yeah.
Each year 40. No, not only 3 years. 3 years is the one unused annual allowance you can carry forward only for 3 years, no? But for right now, from 2019-20 onwards, she is investing more than the annual allowance, right? 19-20, no problem. Last 3 years once will help her. But when she comes to 2020, 2021, this year there is no excess. Year before she can use. But then she comes to 2021, 2022. This year also you are at excess. Brought forward ones are over. Now, how much she can go for maximum? But she is going for 50. Then additional 10,000 will attract another tax charge, right? Correct? They are saying same amount. Like. Annual allowance is fixed, no man. Doesn't matter, right? It's already expired. No, it's not about whether you used or not. You can carry forward only 3 years. After 3 years, it's expired, right? You can go here, go here. The balance is expired, right?
After 2020.
18, 19, yes. But out of that part, you have already used in 2020, 2021. Correct? Separately. For the highest. Yes, this is an additional point I'm explaining, not the main point. Main point was what Abdullah said. Straight away, there is no additional benefit because you are anyway going to be basic rate above that. Agree? So she doesn't have any additional benefit at all. Correct? Without getting any tax benefit, she is just wasting the annual allowance brought forward amounts also. And she is wasting the current year annual allowance also without having a tax benefit. Personally, I don't believe in pension, so I will not invest anyway. You ask what I will do, right? If I was in that position, I will invest in a area which gives me a more return than that because my personal view, I don't trust insurance companies.
So you're saying pension itself is useless because I have annual allowance.
Depends on your attitude. If you save, no need to have pension scheme if you are good at your savings. But generally, people are not good at savings. Then having a committed figure is better than not saving anything. If you are disciplined in your finance, you have so many other good investment options which give you a better return. That's why I always tell my wife, do whatever you want, but don't force me to eat outside single day in a month. If I do that one day, the entire month I'm going to do that. That's the only thing I don't have the discipline. Food. Force me to go to a restaurant one day, the entire month, dinner will be outside. That's the only thing I don't have self-control. So that's why I always tell her, no matter, fine, don't cook breakfast, I'm okay. No lunch, I'm fine. Even starving, I'm okay. Dinner, I need something. Otherwise, you are screwed in monetary terms. So knowing me now, she's trying her level best to adhere to that. Because last few months were disastrous. Obviously, I was here. And if I'm coming here most of the days, I ask her, okay, fine, not to cook. So she doesn't cook. Then dinner, what to do? On our way, minimum 7,000 to 10,000 easily. So salary is over, right? So it's a loss. Sorry. That's a different story.
Sir, either Reason we give, we get mark, right?
No. Main reason you have to give. The basic grade story you have to give. Other one is the additional one. Even if you don't write it, you will get 1 mark. It's only 1 mark. You will get that mark. That is just for explanation purpose I told for you guys. The basic grade one is what you need to tell. Because it's only 1 mark. I'll give you the marking scheme of this one. That will be more easy, you know.
Okay, sir.
If she goes beyond it, she will have to pay tax on it, correct? Isn't 2018-19 A available for the third year? 18-19 one. Yeah, a small portion of 18-19 will be there. Good question. What time is the break? The best question of the day. Break time. I know. He saved you. But the MS will be based on all rates and allowance, right? No, for this one, the answer would be a constant answer anyway for this 1 mark one. So marking scheme will not have an issue for these theory questions. Calculations, please don't trust the marking scheme. That's why I do the calculation in the past papers in the class. Calculation, don't trust the marking scheme, but theoretical answers, it would be the same thing. Uh, uh, I don't know, these are section C questions, not B. These are pure section C. B is also multiple choice questions. Can you record that and let him ask the question once more? Your question itself gives the answer. Depends on the number of marks. This one only 1 mark, so if you just give a small explanation, 1 sentence is enough. If it is around 3 marks, yes, you will have to support with markings. No, then you have to support with numbers. You can't be lazy then. It's exam, come on. It depends on the question, I think.
No, for this question, there were 3 marks. We should say that 87,050.
Yeah, then you will have to use small calculation and show that there is no additional benefit. Maybe a hypothetical amount assigned and say, okay, if she invested this amount, this is the C2, which is not giving any additional benefit for her. We okay. Okay, so you guys are asking for a break. 15 minutes. We'll start, 15. We'll start at, it's now 10:52. We'll start at 11:05. We'll start at 11:05. I don't mind. I know one person will be there in the class. Even though one person, I will start the class. 11:05. Can do, but in this one only 1 mark. So yeah, can do. I'll share the mark scheme. Just remind me, Guys, there are so many batches going on this time, so remind me if I don't share something that I said I will share. Sorry? Why I got so many batches? Yeah, but in the middle, I didn't also know there's a full-time batch. Okay, guys, break time is over. Let's start. I'm moving on to the next question. Yeah, this one also we can do. And you're also in the question, Uma. Your name is there. Okay, let me get screenshots and share it with you. Sorry? Hmm? The thing is, when you're explaining, it's hard. If you're just doing, it's not a big deal. Explaining also, generally, it doesn't take this much of time. Since you guys have studied a lot, only it's taking time. If you have honestly studied, generally I finish one paper less than 3 hours while explaining. Generally, I do that. Because Premiere Plus, I do the recording now. So when I do that recording, it's less than 3 hours, I finish a paper. That is also while explaining, no? That's why. So explaining in the sense explaining, right? Still within 3 hours can do. Not worse, you guys are not prepared. You are not studying, that's a problem. From you, I can't accept that because not on the correct pace. Don't stress out. That is the biggest mistake you can do. I mean, what's the worst thing can happen? That's a different story, but life is not always about what. Forget about what if. Okay, who does what if? What if is whose role? Whose role is thinking about what if? No, what if is Marvel's role, not your role. They will take care about what if. And the other what if guy is Excel. So that what if Excel will take care of. You don't think about what if. You just have the goal. I need to score X amount. X number of marks I need to score. That's it. Then work towards that goal. Simple as that. It's like this. Have you heard about Winston Churchill? Have you heard about Second World War? Okay, during that time, have you heard about there was a country called Great Britain? Okay. The Prime Minister of Great Britain was Winston Churchill. One of the prominent roles. I'm not saying good or bad, but a prominent role during the Second World War. So the fellow once said, if I stop to throw stones to all the dogs that are barking on my way, I will never be able to complete my path. And that is about studying as well. If you spend your time on thinking what if, again, why you are stressing? Because you are worried about whether you can do it or not. Why do you worry about it? Why? Okay, I'll give you an example after the class. I'll give you an example after the class. Yes. This question and the previous question in the exam kit with the adjusted for, yes. I think these two questions are there in the exam kit after adjusting. Yes, I think so. No, you're late. Okay, guys, let's start. Super. Question number 1. Calculate the trading income assessments for Sam, Tam, and Uma for the tax year. Can you guys quickly do that? 5 marks means 10 minutes. I'm not good. It is there, but do the answer genuinely without checking for that. You forget about that. Sorry?
You know, you want to take this.
I do what? Right. Okay. No worries. No worries. Guys, go ahead. 5 marks or 10 minutes max. Please go ahead. Then for you, it might be like a small repetition number, but let's try to understand the concepts through this one. Shan, 10 minutes. Go ahead. You can bring that after you did looking at it. Question. I can grow the room from these guys. But worry there because if something happens to that, uncle is going to take me from the same place. That's why I don't have to say. Is applicable only for season. Unless you know the problem.
In the operating condition, will be a reduction on the employee training population facility behalf of employee. The percentage will be reducted on the training because XYZ, right?
Employer is paying on behalf of the employee. Either.
Yeah.
So I pay on behalf of it.
Yeah.
You can get it for training.
You are training, you can deduct that.
What is overlap from?
Earlier, we had a different basis of tax, which is called as current year basis.
Yeah.
So when we were using current year basis, certain profits were got tax twice. Those profits are known as overlap profits.
Not allowed, no.
Not allowed to current year, when you are seizing the business, from the taxable income, you can deduct those overlap profits. Taxable trading income, you can deduct the overlap profits.
What is the tax percentage for partnership?
Okay.
Same like we take individual and capital, no? Right.
Can't say do that. I was about to give a different response.
No.
First time chance saved farming. Usually it's the other way around. So the one who saved and destroyed Chan is saved by the farming. He's a good friend. Saves you and he's not going to destroy you as well.
Is the operating scheme deductible on total or only for tax? The person employed
Okay, logically. You know the concept and think for the logic. I'm not saying an answer. Logically think.
Sir, we have to take like this, no, sir. Taxi and accounting is same.
Under the same rule.
Which means 30th June is their year. Okay. So now time is leaving on 31st October 2019.
We don't have it.
Now. Because of there's two tax profits they are giving. 1920, 20. So if you take the last ones only from last 19 to 20 profit only, dividing 24 once he has paid that. Things.
I know you can think.
It's only like
So, I in the other.
partner is leaving and take over. The partnership business is closing down here.
You did? You did the answer. Right. Let's see, let's see. Guys, you have to present your answers properly. Yeah? Guys, you need to present your answers properly. Right. So we are asking to calculate the trading income assessments for Sam, Tem, and Uma. Let's read and see what do they have. Sam and Tem have been in partnership since 1st July 2006. Preparing accounts to 30th June. Tem retired as a partner on 31st October 2019 with Umar replacing her as a partner on 1st November 2019. Sam has always received 20% of the share of the partnership profits, with Tem and Umar receiving 20% of the share. The partnership's recent trading profits are given for 30th June 2019 and 30th June 2020. Sam and Tem has unused overlap profits brought forward. Okay, they have given the separated ones, not the partnership overlap profit. They have given partner-wise overlap profit. Let's see. Yeah, you have to take that. It's partner-wise, no, they have given.
So when a partner is trading, you have to include that.
Yes. So Sam's computation very straightforward, right? They're asking for tax. Which tax are they asking for?
Keep trading.
Okay. So 1920 in the sense I have to go for the 30th June 2021. No? That is 132,000. Out of that, 80% goes to Sam straight away. No problems, no. That is clear.
Sir, could you please zoom it? It's not visible.
Let me give a try. Share. Then for Tem,
That means wait for 2000.
now since he is leaving, whatever relevant for him from each year, we have to give him. No? Agree?
So then I'll hold it up if I take.
Wait. I will come to all of it. Still, we are in the middle, no? So for Tam, he is leaving on 1st November 2019, no? Agree? Right. So then he cannot claim the 2020 profit, right? Fully. I mean, fully he can't claim. So divide by 12 into the number of months that he has been in the partnership. So how many months he has been in the partnership? 4 months. So that means divide by 12 into 4 means 44,000. That into 20% would be his share. Yeah. So I gave that to him. He stayed for how many months in the partnership? Right. Then how many months profit he can claim?
The tax year is 1st July 2000, 1st July 2019.
That's what he asked in the beginning itself. All the past papers, we go based on one assumption. Tax year equals your accounting period. Otherwise, we can't do these past papers because when the past papers were there, the applicable method was current year. Right now, the applicable method is tax year. If we are to do this without that assumption, then we will have to apportion a lot. Each and every line we will have to apportion. To avoid that whole confusion, we come to one assumption that is always in past papers, tax year equal to the accounting year. We're good? That I told yesterday, and when we started the pre-mock 2024 also I told. So what is the other thing?
Into 80% is this year.
Okay.
But we should be deducting the Sam's salary and Uma's salary.
Right.
On the trading profit to profit share. There is be deducting salaries, right?
At this point, you don't need to do that. Assume this is after doing everything. Assume this is after doing everything. Yeah. Yes. Because what is the next part of the question? Calculate the whole taxable income for each partner. Agree? And the other thing, do they have a partnership salary? No. No, TAM is not getting a salary from partnership, right? That's a PLC, it's not a partnership. Partnership is different, company is different, right? That is business studies A levels. It's nothing to do with tax, isn't it? What does PLC stands for? No, not company. What company? Private limited company. What is PLC stand for? Public limited companies. Public listed companies. So it's a company. So partnership, is it a company? Then is this salary from the partnership? Let's see, Uma, you said something about Uma also. Ah. Guys, always read the questions properly. Correct? Because this is a common thing that examiner always try to do. He gives certain confusing stuff. And if you don't read it properly, you are done. It's a straightforward thing if you read properly. Just a salary rate, you just need to edit. But if you don't read it properly, you are done and dusted. If it is from the partnership business, yes. Okay. Because I didn't read the question by that time, right? Knowing your examiner, I know he don't put something like that. Since you are asking again, that's why I just read. Okay, let's see what is exactly you're talking about. Technically, your examiner always has a flow. Partnership part, he will discuss only about the partnership. If it is about individual taxpayers, then it will be about individual taxpayers. He don't junk around. That's why I said, let's assume no impact. But since he was questioning again and again, then I went down and checked what is the exact adjustment that he's speaking about, whereas it is from another company. Sam? From the no, wait. The question, I have a question here. From the previous profit, he is eligible for 4 months. No, no, that is not the case, Soumya. The previous profit, he is fully entitled, right? 2019, 30th June, it's fully entitled. After that only he is leaving. So he's leaving on the profit applicable for 30th June 2020, not 2019. So we will have to apportion only the 2021. Again, this is what I said. Right now, if you are doing past papers, we have to assume your accounting year is equal to your tax year. That basic assumption, under that basic assumption only we are doing past paper questions. Otherwise, we technically cannot do the past paper questions because there will be a huge confusion because they have shifted from current year basis to the tax year basis. So in this question, I am aligning the tax year to the accounting year means now your tax year should be 1st of June to 30th June, 1st of July to 30th June. Agree? For this question purpose, that is our default assumption. All the past paper questions, that is our assumption. Your tax year is equal to your accounting year. That is going to be the case in your exam. Soumya, are we okay? Right. So I just took out for 20% of the 4-month profit to who's his name? TAM. And they have specifically given the overlap profit applicable for TAM. It's not the partnership one, specific profit they have given, right? So I deducted that from TAM. We're good? Then for TAM, 132,000 divided by 12 into 4. We're good? Then we are moving on to Uma, the same thing, but now 132 divided by 12 into 8, not 4. And no overlap profit computation for her. Simply 20% of that will be the income for her. Plus the presentation.
So, really get marks for presentation.
We really get marks for presentation, sir.
I have calculated.
Okay. Forget that. Okay, Azio, you are the examiner. I am you. I am the student. You get to mark an answer like that. Now, genuinely think, what is your reaction?
What's the formula?
Genuine thing. You are the examiner who's marking 1,000 papers. So, what is your actual reaction? Don't justify what you have done. Genuinely think.
Like saying, examiner will take each and every formula. So that
Yes.
case, I'm saying.
I know who's the previous lecturer and I know what is the subject. In that subject, the formulas you are talking about will be equal bracket xxx into x percentage. That's it. This is the equivalent. This one is something like that. This one you have a bracket xxx into something percentage plus or minus another bracket. And then you are missing the steps. Previous lecturer was talking about that subject. The formulas you use for that subject is different. That had only one calculation in one formula. Then yes, even I say that, right? 37,700 into 20% in one cell, no problem. But if you have the tax rate band extension also, if you do it in the same cell, if your final answer is wrong, everything is wrong. Fair enough. So each lecturer speaks based on his own subject. Now, when you do FM Salmans, I will say this, all these need to be done in a formula, right? Because that subject, it's required. But if you talk about FR, it's about one number into 1%. So yes, obviously you can do it in one cell. So don't take that same byword for the other subject also. Now, when I'm teaching tax, I told you only to write bullet points. But when I teach audit, I will say, no guys, bullet point is not enough. You have to explain each point. It depends on the subject. Correct? And I explain you the difference of the formulas as well. If it is a simple old formula where one number is multiplied by 1%, tax also no problem, do that. We're good? But if you are covering up 3 steps in one formula, God bless you if your final answer is wrong. By any chance, if your final answer is 100% accurate, you might get the marks, but why to take a risk? Clear? Guys, I told you at the beginning also, we have a good bond on the panel. So we exactly know what the other lecturer is saying and why he's saying. Whatever I tell you now, everyone else also knows because we work as a team. We are good. Next one, calculate the taxable income for all three. 10 marks, 15 minutes. You try. Yes. First of all, clear out what is the question. Which interest? This is who?
And dividend received from government. Dividend.
Dividend income, does it has anything to do with partnership? The other one is what? No, he's saying about a profit, right? The loan? Which one?
Purchase.
Which point?
Second point.
Yes, yeah, okay. This it has to do anything with the partnership profit? That's a different story. Does it has to do anything with the partnership? Who has taken the loan?
Uma.
Has partnership taken loan from Uma? Has Uma taken the loan from partnership? Are we calculating for Uma yet? We splitted the profit, that's it. We didn't calculate the income for any partner yet. We only identified from partnership how much is the income for each partner. What was the requirement? So trading income is from where? Did we discuss about calculating the total income or net income or taxable income? Then
So.
not you can't, you're not focusing, Shan. That is a problem. Trading income means trading income. Income from doing a business. Agree? For that, whatever, I'll come to that. From whatever you are dealing with other parties doesn't have any impact on your trading, no? Correct? Your trading has an impact on what you do with your business only. Isn't it? So what I do with Odok, that doesn't have anything to do with what I'm doing at PPIM. No? What I do at PPIM doesn't have to do anything with what I'm doing at Odok. Same thing. Agree? Where? Who says? Read again.
Purchase the share.
Wait, let him read.
Loan. Buy the share from partners.
So the problem is you cannot understand or you're not reading properly. Which one is the problem? Exactly. Shan, read carefully. This is why you get confused. Focus is not there. You're not reading properly. Tax, you have to read very carefully. Yes, Suma, you had a question. Sam's calculation. Sam or Sam? You good? Right. Okay, everyone. It's 15 marks. Sorry, 10 marks. So 15 minutes. Quickly give it a try. Yeah. It don't take 15 minutes. 10 minutes is more than enough. By 12, you need to finish. Let's see. Right?
Thanks.
Let's do like this.
I know what.
I Not today. Maybe next week. It's the reason that you will not even think, but I will give you the reason hopefully next week. Because wait till next week, start working on it. Answer I don't know, but I really good name. Things can be better. But 1000 separated.
Even in the exam, all separation should be there.
Exam it should be there, that's why you're practicing that one. Those are the big darts over there. That's right. Exactly. Right, one year ago, is that she had the he felt that is good part. I was honestly scared. Going more, I was like, I do have right for me cross the line. She got the good network.
You were saying that.
I can imagine a single minute that your hair was free. Part of the couch.
Suddenly, sir thought his life is better.
Obviously. Not I thought I understood. He was like, compared to that, you're lucky. I mean, my wife. What the last one?
Yes, sir.
Last couple of okay, sir, we start.
No,
Now, yes, it is.
The hardest part is the old color.
Scroll down.
Then
no, sir. It's
time company.
Go up. Keep it. Done? Okay, 5 more minutes.
Ask the. The exam they won't give very much time.
The exam we will have more time, I mean.
Sir, he gave his presentation.
He did without presentation, it's just couple of formulas. No.
No.
We should somehow take the lot of the same class as Shah's studies.
Next class, law.
Together. No, we said.
Fast track when it's fast track.
Fast track, I don't know when it's starting.
But details.
You got come.
Yes.
I got no based on
Sir, when you have this doubt,
Oh, geez.
we can't question TA, no? Because of that.
GA.
Yeah, sir, this is how we have done.
We will start now, no Saturday. Then we know how to cover it. But which one will take three? School will take that to the where we will take no, I'm not sure.
I'll take your word.
Shall we start?
No, last one, the last
Okay, okay. Done.
state part of it.
Yes, thank you, thank you. Not being here. Good. I will do.
Yes, sir. Sir, no need for rate calculation and all,
What calculation?
basic rate band, those calculations, basic, additional rate, high rate, no need to calculate.
That is, no, only taxable income they're asking.
Sure, no, this time.
No, now Ishak, I initially told your format is good, no? So now he has to find some fault in that format. They're asking taxable income, it's fine. But it's awesome, like having kids around. Okay, I got a request to show the Thames answer once more. This is Thames answer. Meantime, let's walk through the balance part. So starting with Sam. For the tax year, Sam does not have any other income apart from his 80% profit share from the partnership. So Sam, then it's a very straightforward calculation, right? So I simply took the trading income, correct? Which is 105,000. No? So personal allowance, there would be a reduction. Personal allowance, we can't grant. So I gave a working for that. So according to my working, 105,600 minus 100,000, which is 5,600. 50% of that, that means 2,800 will be the reduction in personal allowance. 12,570 minus 2,800 means 9,770. That I deducted from here. As a result, the taxable income for Sam would be 95,830. That I'll share the market scheme with you. That is already deducted from the trading income? No, that is for TAM, it is already adjusted. Sam is still in the partnership, right? Either the partnership should cease or the partner should leave. So here he is still in the partnership and partnership is operating.
We haven't given any percentage. We haven't given anything. But total partnership would have profit. Then when a partner leaves, we don't have to push any money.
If you have the profit sharing ratio, you can.
According to profit share ratio, you have to.
Yeah, if that is given. Some question that also might not be there. Sorry, again means, okay. Right, then I'm moving on to TAM. In addition to her 20% profit share from the partnership profits, for the tax year, TAM was employed by XZQ PLC. For the tax year, okay, from 6th April to 31st October 2019. So that means not an entire year. Yes. And received pension income between 1st November and 5th April 2020. The following information is available for the tax year 2019-20. 6th April to 31st October, she has received a monthly salary of 3,400. So how many months? April, May, June, July, August, September, October. Yeah, 7 months. So 3,400 into 7. You all agree? That is for trading income. Yeah. This whole problem is only for trading income, guys. Because current issue is only for trading income. No? So our concern is only for trading income. Okay. Others, anyway, we went by the tax year basis. No. The current year basis and tax year basis concern is only there for trading income. We're good? Right. So why did we take the overlap profit only for TAM and not for SAM? Right. Yes, actually, you are repeating the same question, but let me explain. The overlap profit calculation only comes into the picture either if the partnership is ceased or a partner is leaving the partnership. Then only this overlap profit is a terminal calculation. So there can be two terminal situations, either the partnership is ceased to work or a partner is leaving the partnership. So in Sam's case, Sam is still there in the partnership and partnership is operating. So we did not adjust the overlap profit for Sam. But in Tam's case, Tam was leaving the partnership. That is why we adjusted it to Tam. Rufina, are you okay? Right, no problem. That's okay. Guys, coming back. Salary, are we okay then? Employment income, I gave a working. Yeah, 23,800. Next one. During the period 6th April to 31st October, TAM contributed 5% of her monthly gross salary into XZQ PLC's HM Revenue and Customs registered occupational pension scheme. What do we do?
Take 5% of salary and.
Yes, 5% of the salary she contributed. Then that is deducted from her employment income. Agree? So I simply gave the formula, this 23,800 into,
So I think again, income again.
yeah, from that company's point of view, yeah, no,
But this 1,191 will got
for them, yeah. No, no, she is saying 5% of monthly salary she is contributing. So each month from the monthly salary she is contributing, that means. Because it's occupational pension scheme, right? You can just contribute 5% 1 month and stop it. Correct? So total salary, we multiplied by 5% and gave it as reduction. Then they say 10% is given by the company as well. For that, we gave a line and gave a zero value because that is not a taxable benefit, that is an exempted benefit. We are good? Then the next one. During the period 6th April to 31st October 2019, XZQPAG provided TAM with a diesel-powered motor car which had a list price of 36,600 and an official CO2 emission rate of 89 grams per kilometer. The car met the RDE2 standard. TAM was not provided with any fuel for private journeys. So fuel benefit is not there. Only the car benefit is there. For that, I gave another working. So the list price is 36,600. The starting point is 16%. So you had 89 minus 55 is going to be 34 divided by 5. That means we have 7 slots. So 16 plus 7 means 22. Okay, 22.8 to precise. Excel, no, so you can be precise also. We okay? The rounding off I told you for section A and B. Section C, just keep it as it is in the Excel, no harm. Because they are also using the Excel only. A or B, round off. C, doesn't matter. Keep the original formula in the Excel itself. So it will be 22.8. Yes, you can say 23 as well, no harm. Examiner will give you the marks either way. So 36,600 into 22.8 or 23% would be around 8,345. Something around that. If you use 23%, it would be something around that. Correct? Not a big difference. 2,000 or something, no max. Guys, come on. Then it's a little too much, but still can happen with decimal changes. Fadil, are you okay? So it can't be a big difference. It's only 0.2%, right? Not a big difference. No, it can't be because it's 0.2%. Isn't it 20 for RDE2?
with the
No, without RDE2, it's 20. With RDE2, it's 16, right? We had 4% only if you do not meet the standard. So in this one, they are saying it's meeting the standard. If so, the rate is lower. Soumya, are we okay?
So petrol and
Great.
32, yeah.
Same. Without RDE2, you need to add 4% on the answer. So, but the car was not provided for the entire year. That was only provided for April, May, June, July, August, September, October, 7 months, right? So that 7 months period I took, balance 5 months, I took it out. So for the 7 month period, the value will be 4,868, which I again took here to my main calculation. We're good? Right. Then XZQ PLC provided Sam with an interest-free loan to purchase a motorbike. Sorry, the balance of the loan outstanding as at 6th April 2019 was 6,400, and Tam repaid the loan in full on 31st October 2019. We don't need to take that, right? That's settled within the tax year. So loan was obtained during the tax year, loan was settled during the tax year. So it's a very short-term loan, like an advance that you are taking from your salary, rather than a loan, right? Then yes. Yeah,
You have to take the whole of
correct. Because this is taken during the tax year, settled during the tax year. So basically, it's like a salary advance, more or less like a loan, right? Anyway, the concern is about interest, but the problem is, are we considering the interest or not here? And it is less than 10,000 also, correct. Amna's point is also correct. It is less than 10,000 as well. If it is less than 10,000, we had anywhere an exemption.
But the dot form is 10,000, make the outstanding amount within the 6,000 amount.
No, we said outstanding amount. We said outstanding amount. Yeah.
It's exact.
So here it is less than 10,000. So that exemption anyway comes into the picture. Apart from that, guys, this is only few months. It's more or less like a salary advance more than a loan. Correct? Yesterday also I got a request from one of my employees to give salary advance. So we are not charging interest for salary advance. No. That also goes for 3 months. Correct? We're good? Either way, this will be exempted. Even if you go by the logic, that is also exempted because within the year, within few months, the whole thing is sorted. This is not qualified interest, no? Which, under which one?
by the chapter 4.
This is chapter 4. What he's asking is in chapter 2. Qualifying interest is in chapter 2. This is not a qualifying interest.
It's qualified. No.
Interest free.
This is a loan taken from the employer, right?
The qualified is certain.
Again, you're confusing two different areas. Qualifying interest doesn't have to do anything with your employment income. What are the qualifying interests we had? No. What is happening for this guy? We studied qualifying interest before we study anything else. We didn't know about beneficial loans at that time. We didn't know about FHA that time. FHA comes in chapter 3. This comes in chapter 4 and 5. So what we are talking about is in chapter 2, when we started. It is a relief that is deducted from your total income. We had 4 kinds of qualifying interests. Correct? One, you take a loan to purchase plant and equipment to be used in your employment. 2, you borrow amount to invest in an employee-controlled company shares, which you are an employee. 3rd, you borrow to invest in a partnership. 4th, you borrow to purchase plant or equipment to be used in the business of a partnership in which you are a part. These are qualifying interests. What we are talking about right now is an employee is taking a loan from an employer. So here the concern is employer did not charge an interest. Whereas if you have borrowed outside the market, you should have paid an interest. Correct? Since you are an employee, you are getting interest-free loan or a subsidized loan. Which is a benefit for you? Remember? Came under employment income.
The 2.25.
It comes here. No, it comes here. Only thing, this is less than 10,000. And we are talking about few months, right? It is April to October. plus it is less than 10,000 always. So if it is less than 10,000, anyway, that is exempted. Clear? We're good? Exactly. I got all the answers online. While we were speaking, what are the qualifying interest and everything? Nicely, all the points have been given online. Sorry? Who?
You tell me.
No.
No,
Wait, I got a question. Settled after tax year means 6.5% is applied. Yeah, referring to which point of the question, Soumya? Interest on loan. You mean point number 4, right? Are you settled after tax year? If settled after tax year, still in this case, nothing to be done. Because like Amna said, the outstanding amount is less than 10,000. So if it is less than 10,000, the loan benefit is exempted. But if it is above 10,000 and this was settled after tax year, then 2.25 you would have considered. The gap between actual interest you would have paid and the interest that you calculate under 2.25 official rate of interest. Soumya, are you okay? Right. Shan, are we good? Okay, let's have a chat after the class. Point number 5. During the period 1st November 2019 to 5th April 2020, TAM received the state pension of 3,650 and a pension of 11,300 from XZQ PLC's occupational pension scheme. These were gross amounts. Okay. We had a lifetime exemption. I agree. 1,073,000. But it had a condition. It should be a bulk withdrawal. This is not a bulk withdrawal. If this is not a bulk withdrawal, this is going to tax in the normal way. State pension anyway taxed. Occupational pension also, if it is not a bulk withdrawal, the lifetime allowance will not come into the picture. So the full amount is getting taxed. We're good? So 14,950 will be taxed. As a result, employment income will come to 42,428. Are we good? Then if you can recall, we were discussing about a working so far. This I need to map to my main calculation. Yep. No, that was employment income. We were in a working. So now I'm coming to the taxable income. So I took the employment income here. So no deductions or whatever given, right? So once I add the trading income also that she received, 1,000 or something, it will become 43,428. So I deduct the personal allowance also, which will be only 30,858. Why do you have big difference? What is your employment income? Uh, 3,650 plus 11,300. There are two contributions received, right? Both are taxable in this case. Are you okay? Right. So we completed TAM. Are you okay with TAM? Can I move on to Uma's one? Chan looks very depressed. In addition to her 20% partnership profit, Uma was employed in another company, ABCD PLC, throughout the tax year as a marketing director. The following information is available for the tax year. Gross annual director remuneration 180,000, obviously taxable. She paid interest of 2,100 on a personal loan taken out to purchase her partnership share. This is what you were talking about. It's a qualifying interest. Agree? That can be deducted from the total income. Taken outside to purchase the share in the partnership.
So if it's qualified, you will be deducting.
Deducting from total income.
That is exempt.
No, deducting from exempt and it should be an income, no man. This is an expense. How can you exempt an expense?
Expenses are allowable in this law.
Yes.
Income is only-
Taxable law exempted. We are okay?
Income.
How can you exempt an expense? Now okay? Right. So this interest you can deduct, but not from trading income or employment income, from the total income. She has received a dividend income also. I took that as well. So put everything together. 197,900. So you can't deduct personal allowance. That is going to be 0. So the taxable income for Uma is going to be 197,900. Good boy. But your presentation, we have a problem. No, I was just kidding. It's a qualifying interest since it was taken for a qualifying purpose, which was to purchase. Correct. 100% correct, Amna. Okay. So are we okay? With that, we are done with another section C question. Yeah. We stopped at this point for today. Shan and Fadil wait after the class. Yeah. So thanks for the participation. Next week, we'll continue the balance part of this question. Do we have? I'll answer to that separately, Soumya. Because this is the TRG session or the expert success plan. But the one you are referring is just an additional extra class I put for you guys. The Saturday one, it's not a part of the expert revision plan. So expert revision one will be only on Sunday, the normal time. The other one you guys are referring to is completely different. That is an extra class I use for the theory students. Right, guys, let's catch up on next Sunday then with this same program. This paper we will continue. We have one more 15-mark question there. Then we'll move on to another paper. Thanks, guys. Let's catch up next week.